More than 100 years ago, the United States Supreme Court validated a phenomenal asset class. Until just a few years ago, this asset had only been available for investment by institutions and the very wealthy. Warren Buffett made a $207 million initial purchase of this asset in 2004. This financial instrument has been a well-kept secret of the financially elite, which for decades has helped insulate them from economic turmoil, and yet has provided them with a historic double-digit return. Approximately 10 years ago, this asset was made available to qualified individual accredited investors who meet suitability guidelines. Because this is not a stock, bond, mutual fund, or real estate, it is not well known among individual investors. The mainstream brokerage firms do not offer it. Therefore, they have little or no knowledge or education about this investment to share with their clients. The asset is called a senior life settlement, and it may quite possibly be the greatest investment that you've never seen. A life settlement is simply the purchase of an existing life insurance policy by a third party. This transaction may be a huge benefit to the seller of the policy. Prior to life settlements, the only option available to the seller was to let the unwanted policy lapse or to surrender it for what little bit of cash that it might have built up in it. Very large universal life policies are submitted for consideration by senior Americans age 78 and above who no longer want or need or can afford these large policies. Senior Americans benefit from the selling of their policies because it enhances their quality of life and standard of living in their later years. Investors benefit from the purchase of an interest in these policies with a known face amount, that's the death benefit, at a substantial discount. When the policy matures, the payout comes from a legal reserve life insurance company. Without the wild ride of the stock market roller coaster, this is a win-win for everyone involved. There is a company with a 22-year history of acting as the buying agent for such policies on behalf of the investors. The company identifies, qualifies, and arranges for the purchase of life insurance policies suitable for investment. This company has purchased more than 6,800 of these policies, with more than 2,600 of them paying out full benefits to all investors thus far. The company has successfully completed more than 145,000 life settlement transactions without any investor losing money on their entire portfolio. In fact, since October 2011, this company has paid out more than $95 million to over 3,000 individual investors. Returns on policies that have matured during that benefit period range from a low of 3.6% to a high of more than 145% average annual compounded rate of return. To research the track record of this buying agent's performance, you need look no further than the matured policy investment document covering 11 years and attested to by an independent accounting firm. This document shows returns to investors far greater than a 10% average annual compounded ROI. This is in spite of two major market crashes in 2001 and 2008. Imagine if your IRAs, trust funds, and long-term investment cash were in a similar position to enjoy these kinds of returns over the next 5 to 10 years, and were contracted with the MetLifes, John Hancocks, Pacific Lifes, and Prudentials of the world for your payouts. You don't have to imagine it. More than 30,000 existing investors will enjoy over $2.4 billion in payouts during the next few years, regardless of current economic issues like the fiscal cliff, political chaos, Mideast upheaval, European financial crisis, wars, the price of oil, interest rates, business cycles, or the stock market crashes. We all know that it's not a matter of if, but when another market crash will hit. Whether it will be in 2013, 14, 15, 16, or 17, it's just around the corner, and it is inevitable. In the economic collapse of 2008, out of more than 24,000 investors who were invested in these senior life settlements, not one of them lost a single nickel due to the stock market crash. Think about this. In a 1.6% 10-year T-bill market, with CDs and annuities paying out small single-digit returns, this is the greatest instrument in existence for providing security of principal without the wild ride of the stock market roller coaster. Virtually every market forecaster and economist alive is predicting that the next 10 years will be more challenging than the past 10 years. You may now have the option to utilize this superior asset class to avoid another 2008 collapse and provide you with the financial peace of mind that you deserve. You have the right to protect what you've worked so hard to create. Please call or email the person who sent you this video right now. They will arrange to provide you with all of the details that you need to make an informed decision about this unique asset class. So pick up your cell phone right now or open an email and let them know that you're interested. You'll be glad that you did, I promise.